Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep going with our analysis of the euro currency. So it seems yesterday investors were a bit busy with the ETF chaos that Securities and Exchange Commission have organized on the market, and actually probably they had no time for something else, because you can see on the daily chart mostly everything stands the same, but some interesting moments exist on the hourly and 4 time frame chart that brings some more clarity to the patterns and in general analysis that we have discussed in recent few sessions. So on the daily chart, as we already mentioned, despite that we still have some uncertainty in decision performance here with this high wave, and it has not been broken yet, in general this type of performance is not typical for bullish market, because usually when the market touches the strong conference, especially accompanied with the oversold, it shows stronger reaction, and reaction starts faster, not for too long. The market stands in a consolidation, something of this kind. So you can see 2 sessions and then this market starts upward reaction. Here we have more than a week already standing around this area, and this makes us think that here's the bearish power stands a bit stronger. So bears have some advantage, and maybe they will not be able to push euro significantly lower, but retesting of the conference or even a deeper drop here is really possible. At least currently we do not see a really big drastic bullish background that could tell us that probably market is ready for upward action. On the 4 time frame chart, everything stands nice with the pattern that we discussed yesterday. So we also have discussed, if you remember, some entry options, how it's possible to take the position. 4 time frame chart has turned bearish. So those of you who have taken position here when market was standing in the morning yesterday, now you could see that even minor downside action led you to move stops to the break even and see what will happen. Once again, if we will get deeper ABCD retracement, this market could retest the 1020 area, 10 even, 1020 right here. You will get another chance for a possible position taking. So if still it will keep going lower, that's great. You already will have position, as you could participate with this ABC top downside target based on the nicer looking hand and shoulders pattern. From that standpoint, everything stands great. Now let's return back to scalp long performance that is possible and that we discussed on the hourly chart. In fact, the hourly picture is only that we need right now, because only here we see some changes. Indeed, take a look that the pattern that we have discussed recently has been completed. So market has formed nice ABCD pattern, give us godly steeple to buy. Those of you who taken long position here, now you have to move stops to the break even and just control the possible performance of the market. And it seems very soon we will get the answer whether we will get the upward action, some extended A, B, C bottom, OP is 1030, or market just will fail and start keep dropping lower, because this is invalidation point for this scalp bullish setup, short-term bullish setup. Price completely harmony with this potential head and shoulders. You can see that the right arm stands in a pretty nice harmony with the left arm. ABCD is done. Here's market showing bounce up from the fib support area. So normally bullish market has to stay above this area and has to keep going higher. If you'll see that this will not happen, the market start dropping low below the C point, closing to the A, it means that bears are taking control of the market and we stand at the eve of the active stage of this head and shoulders pattern. So, and we should be prepared for starting with the breakout to the downside, or market will challenge once again this support area and so on. That's actually what we need to keep an eye on in the current situation. So those who have taken the short position now could keep it just moved up to the break-even. If you have taken long position, you do not need to risk too much with hiding stops even below the A. You could place it right there just below the C point, or for instance you could calculate the accurate OP target where it's actually extension has to stay slightly lower than the market has completed, and place stop slightly below this area. So if somehow will happen that market will form here minor butterfly, for example, will complete the OP just to not be washed out by occasional downside swing, then upper direction might start right after that. But at the same time, it is very small potential risk. So that's some minor thoughts on the current technical background, and let's see what will happen. But in general, as I said already, it's based on the performance on the daily chart. It seems that the bears still have more chances to succeed rather than bulls here in the current environment.